Good evening, students. Welcome to the session. So, I hope you have revised the chapter 60 deductions. Any questions? Because today, what we are going to do is we are going to solve some questions from the PGBP. Okay. So, I hope, as I told you in the last class, also, I hope you have gone through that as well. If you have any questions, please feel free to ask me regarding chapter 60 deduction. But today we are going to solve good number of problems from your module itself in relation to the PGBP chapter. Because I want you to practice that thoroughly. You see the kind of questions that are asked. It's a very, very important topic. So we are going to solve and spend some time on understanding these questions. And you would be required to have the knowledge on this particular chapter, right? So shall we start? Let me just reshare the screen again. Good evening, Jyoti. Good evening, Megha. Okay. Let me know if the screen is visible to you once. Good evening, Samyathan. Yes. Is the screen visible to everyone?
Yes, ma'am.
Okay. So let us solve the questions from this chapter. Let me take you to the start of the chapter itself. Good evening, Geeta. We are going to solve some of the questions. Just give me a minute. Yes. First, we are going to look at the questions around the depreciation. So let us start with this. A newly qualified CA, Mr. Dhaval, commenced the practice and acquired the following assets in his office. At the cost shown against each item, calculate the depreciation from his professional income for 25-26. Assume that all the assets were purchased by way of account paid check. Now, you just need to tell me what is the depreciation for each of the item. Computer, including computer software.
40%.
40%, yes. And for what will be the amount of depreciation?
14,000.
Yes, everybody getting the same answer, 14,000?
14,000.
Yes, because it is put to use for
More than 180 days.
More than
more than
180
one.
days.
Yes, right? So that is correct. Okay. So 35,000, computer has the depreciation rate of 40%. Computer UPS.
Generally, it is 40%, but since it is put to use less than 180 days, 20% will be available.
Yes, correct. Good evening, Sanjay. So here it will be again 40%, but yes, Megha, correct. But this is put to use for less than 180 days because it is put to use on 8th October. So therefore, in this particular case, it will be restricted to 20%. Right? So what do you need to see when you count the 180 days? Whether you need to say the date of acquisition or when it is put to use. When it is
Put to use.
so even if it is acquired for more than 180 days, however, if it is put to use for less than 180 days, then in that particular case, you will get the reduced depreciation. What about the computer printer?
40%.
40%.
Correct? 40%, right? Because again, it is to use more than 180 days. Books, of which books being annual publications are of 12,000.
40%.
40%.
40%, right? So on book, it will be 40%. Correct? Yes. Yes, Mega, right. Okay. Next one is office furniture acquired from a practicing CA.
10%.
10%.
10%? Yes. Laptop,
40%.
20%.
20%. Less than
20.
180. Less than 180.
Yes. It is acquired more than 180 days. That's what I was telling you. However, it has been put to use for less than 180 days. Are we clear? Yes? So all of your
Yes,
answers
ma'am.
are correct. Okay? Let us look at this one. This is again a very simple illustration, but this is more pertaining to the additional depreciation. XYZ engaged in manufacturing furnishes the following particulars. Opening WDV as on 1/4/2024, that is as on 31st March 24 after reducing the depreciation of last year, 30 lakh. New plant and machinery acquired and put to use on 8 June 2024. And another plant and machinery put to use on 15 December 2024. And then there is computer acquired and installed in the office premises on 2nd January 2025. So first, tell me what is the depreciation? Give me the total amount, everyone.
Normal depreciation 8,70,000.
8 lakh 70.
On 30 lakhs and 20 lakhs, 15%. And on 8 lakhs, since it is less than 180 days, 7.5%. And on 3 lakhs, since it is less than 180 days, it will be 20%.
Let us look at it. So the WDV, first of all, on the opening WDV 30 lakh, you will calculate, right? So you will have to
Yes,
calculate
ma'am.
on the opening WDV, correct? You will add the plant and machinery which is put to use for more than 180 days, which is how much? 20 lakh.
20 lakh.
On 20 lakh and 30 lakh, total 50 lakh. How much is the depreciation? 15%.
7 lakh 50,000.
7 lakh 50, correct? Then the new plant and machinery which is put to use for less than 180 days, 8 lakh. On that, it will be 7.5%, right? Because it is
60,000.
60,000. And on the 3 lakh of computer, what will be the depreciation?
20%.
20%.
20%. So it comes to 60,000. So my total amount of depreciation is coming to
8 lakh 70,000.
correct. What about the additional depreciation?
On 20 lakhs, 20%. And on 8 lakh, 10%.
10%.
Correct.
On
On
computer,
computer, we will not get the
since it is in
additional
office,
depreciation.
we will not get additional.
Correct? Because
Yes,
the
ma'am.
additional depreciation is allowed only on the plant and machinery. It is not allowed on any plant and machinery installed in the office premises. So on computer installed in office premises, you will not get any additional depreciation. Are we clear? Any questions, any doubts so far, students?
Clear, ma'am.
Okay.
Clear?
So let us take the next question on this. Okay. Light and Power, engaged in the business of generation of power, furnishes the following particulars. Compute the depreciation allowable under 32 and the opening balance of the WDV as on 1/4/25. While computing his income under the head PGBP, the company has opted for the depreciation on the basis of written down value. What is the other method for the power generating unit?
SLM method.
Straight line method.
SLM, right? Is it compulsory to take SLM?
No, ma'am. We can optional. We have to file it before 139. Once
Correct.
it is opted, it cannot be changed.
Correct. So this is an optional scheme, right? It is not necessary that every time the company which is into the power generation unit has to go for that SLM basis. It is not at all necessary like that. This is an optional scheme, and once exercised, then the option cannot be changed. And you have to exercise this option before the due date of filing the return of income. Very good, Mega. Yes. Fine. So if you look at now, it has opted for the written down value basis. Assume that all the assets were purchased by way of account paycheck and the company has not opted for the special tax regime under 115BAA or BAB. Opening WDV is given for the 15% block as on 1/4/24, whose purchase value is 8 lakh. WDV is given 5 lakh 78. Second hand machinery 15% block purchased on 29 December for business purpose 2 lakh. Machinery Y 15% block purchased on 12th July for the power generation 8 lakh. Acquired and installed for the use a new air pollution control equipment on 31st July. Then new air conditioner purchased and installed in office premises on 8th September. New machinery Z 15% block acquired and installed on 23rd November for the generation of power. And then they have given a sale value of old machinery X sold during the year. Purchase value is 480 and WDV is 346. And the sale value is 310. Okay. So first we'll go one by one. What about this opening WDV? How will you go about it? What will you take?
15% depreciation on 5,78,000.
Correct. 5,78,000. Fine. Purchase of second-hand machinery on 29 December for business purpose.
On 2 lakh,
Yes,
7.5%.
7.5%.
5% because it has been put to use for less than 180 days.
180 days.
Then machinery Y purchased and installed on 12th July 2024 for the purpose of power generation. 8 lakh.
15%.
15%.
and 20%.
So 15% and you will also get the additional depreciation of 20%. Why we will not get on the second hand machinery additional depreciation?
It is not allowed under section 32, ma'am. Second hand machines are not allowed.
Correct. Second hand machinery is not allowed under the additional depreciation. So on the additional depreciation, you will not be able to get any on the additional depreciation. The ineligible asset was second hand plant and machinery. What if the value of the second hand plant and machinery is less than 20% of total value of plant and machinery? Will you get additional?
No, ma'am.
Why?
It is not in additional depreciation.
Correct.
It is specified business something.
Correct. Very good. It is only given in the specified business. Here, for additional depreciation, even if it is less than 20% of the total value of plant and machinery, you will not get the additional depreciation. Fine. What about if the second-hand machinery was imported?
Not allowed.
Still not allowed. Good. So in that case also, on the second-hand machinery, any kind of second-hand machinery, whether it is imported, whether its value is less than 20% of total value, it is not allowed for additional depreciation. Please remember that. In exam, it is quite easy to get confused because you have read so many provisions and you are sitting for exam. Do not make mistake in the additional depreciation on second-hand plant and machinery. Clear? Next is acquired and installed a new air pollution control equipment.
40%.
Air pollution control equipment, how much is the depreciation? 40?
40%.
Correct,
Yes, ma'am.
40%. Yes. So 40%. And what about the additional depreciation?
Yes, ma'am, allowed.
Allowed, ma'am.
Entire, because it is used for more than 180 days. So you will get the additional depreciation plus you will get 40% depreciation. New air conditioner purchased and installed in office premises on 8th September, 3 lakh.
Only 15%.
On air conditioner, what is the depreciation rate?
15%.
15%.
Correct? 15%?
No additional
Yes?
depreciation.
No additional depreciation. Fine. Next is new machinery Z acquired and installed on 23rd November for the purpose of generation of power, 3,25,000.
7.5% and 10%.
7.5%.
Right,
1.5%.
7.5%. Yes, correct. So on 7.5% and in the additional depreciation, you will get
10%.
10%.
10%.
Tell me one thing, what about the balance 10%?
It will be taken in the next year.
Taking next year.
No, you
Additional
have to write that note in the exam. You have to mention that note. Don't assume that the examiner knows about this. Don't just write that the additional depreciation is 10%. You have to write like this in the exam. The balance 50% additional depreciation in respect of the machinery Z, compute the amount of rupees 32,500 can be claimed as deduction in the subsequent financial year. So write this particular point. That is when you get the full marks. Are we getting it? So these kind of questions are, very easy questions. But if you do not write the proper notes, you will lose out on marks. Fine. Sale value of old plant and machinery. How much we will reduce?
Amount received 3,10,000.
3 lakh
Correct.
10,000.
10.
So this is how you will make the presentation. You will make two blocks, 15%, 40%. Opening, your opening is nil. You will add all the plant and machinery, whether less than 180, more than 180. Here it is 40%, right? Your assets sold during the year 310. This will give you your closing WDV. And then you compute the depreciation. What is the depreciation on more than 180, less than 180? What is the additional depreciation? This will give you the closing WDV. So this is how you need to make the presentation in the examination. Are we clear, students? Any doubt, any questions? Yes?
Clear, ma'am.
Okay. Let us then move to the next question. Let me just show you this question. Yeah. Yeah. I think this question we had done in the regular class also. The same question of telecom services. Do you recollect?
Yes, ma'am.
Okay. Shall we solve once again or should we skip it because we have already done this question?
Skip, ma'am.
Okay. No problem. So let us then do it on 35 AD. Mr. A commenced the operations of the business of setting up a warehousing facility for storage of food grain, sugar and edible oil on 1/4/24. He incurred a capex of 80, 60 and 50 lakh respectively on purchase of land and building during the period January 24 to March 24 exclusively for the above business and capitalized the same in its books of account. Cost of land included in the above figure was 50, 40 and 30 respectively. During the previous year 24-25, he incurred the capex of 20, 15 and 10 lakh respectively for extension or reconstruction of the building purchased and used exclusively for the above businesses. The profits from the business of setting up warehousing facility for storage of food grain, sugar and edible before claiming the deduction under 35 AD and before depreciation was 16, 14 and 31 respectively. Assume the expenditure was made by account paid check or ECS. Compute the income under the PGPP for the AY 25-26 and the loss to be carried forward, assuming Mr. A is exercising the option of shifting out of default tax regime under 115 BAC 1A and has fulfilled all the other conditions specified for the claim of deduction under 35 AD and want to claim deduction under 35 AD and has not claimed any Chapter 6A deduction relating to the income. So first of all, which businesses are qualified for 35 AD?
Warehousing facility for food grains, sugar.
Yes. Warehousing facility for storage of sugar. What about warehousing facility for agricultural produce?
Yes, allowed. Only edible oil is
grain.
not allowed.
Correct. On the edible oil is not allowed. So warehousing facility for storage of food grains and sugar both will be eligible for 35 AD, not the edible oil. So this is the first note that you will be writing here in your examination. What is the deduction? Deduction of the 100% of the capital expenditure under 35 AD in respect of setting up and operating a warehousing facility for storage of sugar and setting up and operating for storage of agricultural produce where the operations are commenced after these dates. Since the setting up and operating a warehousing facility for storage of edible oil is not a specified business, Mr. A is not eligible for reduction under 35 AD in respect of capex incurred in respect of such business. Clear? So these are the first two notes that you will be writing. Then he has incurred a capex of 80, 60 and 50 on the purchase of land and building during the period January 2024 to March 2024 exclusively for the above businesses and capitalize the same in the books of accounts as on 1st April 24. What will we have to do with this?
It is allowed, but only land expenditure are excluded from it.
Correct. So these are allowed as the deduction under 35 AD, but these are incurred prior to the commencement of business. The business has commenced on 1/4/24. These were incurred between January to March 24. So what do we have to do?
Yes, ma'am, allowed it.
We have to capitalize, since it is capitalized in the books of the accounts, then it is allowed.
This is capitalized. Yes, very good. So again, the next note that you are going to write here is that pre-commencement expenditure is allowed in the previous year of commencement of business, provided the expenditure is capitalized in the books of accounts on the commencement of the business. Right? So this is a note again you have to mention because pre-commencement expenditure are the capital expenditure which are generally not deductible. But 35 AD allows you the deduction for even the pre-commencement expenditure provided you have capitalized the expenditure in the books of accounts on the commencement. Clear? Good. Then you have to also mention here that you will get the deduction of the capital expenditure, which is incurred wholly and exclusively for the specified business, but this excludes the capital expenditure on the land. On the land, not building.
Yes.
And they have given you separately the cost of land in the above figure is 50, 40 and 30 respectively. So what is the deduction that we will allow?
-80 minus 50, 30 for food grains, and 60 minus 40 for sugar, 20.
Correct. Now, what about the edible oil business? What would you do with its capital expenditure of 50?
Depreciation.
Correct. So you will claim the depreciation. Do not forget this. Are we going to claim the depreciation on entire 50 lakh?
No, ma'am, 50 minus 30. Because on
Why?
land, no depreciation.
Correct. land is not a depreciable asset. So for the edible oil, even though you can't claim the 35 AD because it's not a specified business, you can still claim the depreciation. So on this 50 lakh, you can claim the depreciation, but you have to exclude from it the cost of land because land is not a depreciable asset. So 50 minus 30 on 20 lakh, what is the rate of depreciation that I will claim?
10% building.
10%. Are we clear? Okay. Now,
Yes, ma'am.
during the year, he has incurred another capital expenditure of 20, 15 and 10 lakh respectively for extension or reconstruction of the building purchased and used exclusively for the above businesses. What do we do?
For eligible business, we will take the depreciation capital expenditure under 35 AD, 20 lakhs and 15 lakhs. And for non-eligible business, edible oil, we will claim depreciation under section 32.
Correct. So you will write in the examination that these are the capital expenditure incurred specifically for the specified business, incurred wholly and exclusively for the specified business. Therefore, the deduction under 35 AD will be allowed on these capital expenditure in respect of the 10 lakh, which is the expenditure for the extension or reconstruction of the building. This is again a capital expenditure since it is increasing the life of the asset, or this is a benefit of the enduring nature, right? And therefore, it has to be capitalized to the cost of the asset. And on this, we will claim the depreciation. Fine. Next is the profit from the business is 16, 14 and 31 lakh. So from this profit, we will claim the deduction. So first of all, if you look at for food grain, it is 16 lakh. For sugar, it is 14 lakh. From which we have claimed the capital expenditure incurred prior to 1/4/2024, which has been capitalized, right? These are the amounts that you gave me, 30 and 20, excluding the cost of land. Then capital expenditure incurred during the year 20 and 15, right? So this total comes to 50 and this total comes to 35. So 100% of capital expenditure is allowed for food grains and similarly for sugar, right? And as far as the normal business for edible oil is concerned, 31 lakh is the profit. We have claimed the depreciation on 50 minus 30, excluding the land, plus the new addition 10 lakh. On that, we have claimed 10% on 30 lakh, which comes to 3 lakh. So 28 is my profit from the edible oil. Now, from the food grains, it comes to a loss of 34. Because 16 was the profit and the deduction under 35 AD was 50. So will we restrict the deduction to 16 or will we?
Deductions will be allowed only up to the income we earn. Here it is not the deductions.
So what is it?
It is the expenditure which has occurred for the conduction of the business. So it will be the loss.
Correct. Very good. So 35 AD is a deduction of the capital expenditure, right? And with this, you're computing your income from business or profession. By allowing this deduction, you're computing what? Income from business or profession. And you can have a loss in business, correct? So year 50, I will not restrict to 16. But if I have claimed this deduction under 80, IE, IB, all of those sections, those are the deductions from the gross total income. And as per section 80A, you cannot claim more than the gross total income. As per 80A says that you have to restrict the deduction to the gross total income. So it cannot exceed that. Number one. Number two, the chapter 6A deduction in relation to income. These deductions are basically nothing but these are not expenditure deduction. 80IA, 80IB may you don't get the expense ka deduction. You don't get the capital expense that you have paid as deduction. What you get is the income is allowed to you as a deduction. profit of the undertaking is allowed to you as a deduction under Chapter 6A. Isn't it? What did you see in ATIA? ATIA में the profit of the undertaking was allowed to you as a deduction under ATIA. Here, under 35 AD, you are claiming the capital expense as a deduction. So if your expenditure is more than your income, your receipts, you can have a loss. But what is your income? If I'm allowing that as a deduction, you can't claim more than the income. The deduction has to be restricted to your maximum income. Yes or no? Are you understanding the difference between the ATIA and 35 AD? All of you? Yes? Yes or no? I'm not getting the answer.
Yes,
Everybody
ma'am.
understood? Yes? Okay. So here I will claim 50, 35. Both are resulting to me in the loss from the specified business. Can I set it off against the edible oil profit?
No, ma'am. Loss from the specified business can be adjusted on specified business and it can be carried forward indefinitely.
Correct. So loss from the specified business can only be set off against the profit from the specified business. So you have to write in the note that this has to be carried forward and set off in the next year as per section 73A. What is the time limit for that?
Infinite.
How much?
Means infinitely we can carry forward.
Is it infinite?
Indefinite period.
Yes. So loss from the specified business which is there can only be offset against the income from the specified business. But what is the time limit that we have? Yes. Is it infinite?
Infinite, ma'am. Indefinite.
Yes. So you can carry it forward indefinitely. Clear? So you can set off, but if you opt in for the 115 BAA, 115 BAB regime, you can't be setting off the losses. Clear? So you have to file the return of income before the due date under 139(1) to claim the losses. Any questions? Is this particular question clear to everyone? Fine? Okay. Next, let us see. XYZ has commenced the operations of business of a new 3-star hotel in Madurai, Tamil Nadu on 1/4/24. The company has incurred a capital expenditure of 50 during the period Jan to March exclusively for the above business and capitalized the same in the books of accounts as on 1/4/24. During the previous year, it incurred the capex of 2 crore, out of which 1.5 crores was for acquisition of land exclusively for the above business. Compute the income under that PGBP, assuming that XYZ has fulfilled all the conditions specified for the claim of deduction under 35AD and opted for the claim of deduction under 35AD and has not claimed any deduction under Chapter 6A. The company is not choosing for the concessional tax regime. The profit from the business of running the hotel before the deduction under 35AD is 25 lakh. Assume that the company also has another existing business of running a 4-star hotel in Coimbatore, which commenced the operations 15 years back, the profits from which are 120 lakhs. Also assume that the expenditure incurred during the previous year were paid by the account paid check or ECS. So how should we start with it?
So income from specified business, 25 lakhs. Under section 35 AD, before the commencement of the business, since it is capitalized, the capital expenditure of 50 lakhs is allowed. And again, during the previous year, 24-25, total expenditure is of 2 lakhs, out of which 1.5 CR is for the land, which is ineligible asset. So we will be reduced from 2 1.5 CR. So 50 lakhs will be, again, capital expenditure will be allowed. So total 100 lakhs of specified business 35 AD will be allowed. Expenditure of capital expense will be allowed. So 75 lakhs will be loss.
Correct. Very good. Now, can we set off this loss against the business of running the hotel of 25 lakh?
Yes, ma'am.
Why?
Because as per notification, previous it's same 2 star or 3 star business is there previously held, then we can set off it.
Right. So here, the first of all, the profit is 25. Here, the capex before fund for 24, which has been capitalized and which is exclusively for this business, is 50, which is allowed. Capital expenditure of current year excluding land is 50. So this gives you the deduction of 100. So this is going to 75. Now, profit from the existing business of running a hotel, 120, we can set it off because for the specified business, both are my specified business. In the earlier question, the business was not my specified business, right? The edible oil one. However, in case of the hotel, what they say is if you are building and operating a hotel of 2 star or above category, then it is considered as a specified business. So I can claim the set off of loss against this hotel income of 4-star category. So here 75 minus 120, my net profit will be 45. Fine. Okay.
Yes, ma'am.
Any questions? Yeah. Okay. Next one. ABC is a company having two units. Unit A carrying on the specified business of setting up and operating a warehouse for storage of sugar. And B carries the non-specified business of operating a warehouse for storage of edible oil. Unit A commenced operations on 1/4/23 and it claimed the deduction of 100 lakh on the incurred on the purchase of two buildings of 50 lakh each for operating the facility for storage of sugar under 35 AD for AY 24-25. However, in February 25, Unit A transferred one of its building to Unit B. Examine the tax implications. What shall be the answer here?
When specified business building is transferred to non-specified business, then we have to take the depreciation and 100% deduction will be not allowed to that building.
No. What do we do? Yes, we have done this in the class also. Anyone? Yes, faster. Look back the provision that we have done in the class. Let me see who answers.
Ma'am, when the asset is transferred to the non-eligible building, then we have to take notional depreciation on it.
Yeah. But there is a time frame.
8 years. Before 8 years, if the asset is
Yes.
transferred to the ineligible business, then we have to calculate actual cost minus notional depreciation. That will be the value. Then depreciation will be allowed on the ineligible business.
Correct. So if I show you again, if I take you back to our class notes, right? So asset to be used for a period of 8 years for the specified business. This is what is the condition, isn't it? Asset to be used for a period of 8 years. Now, if the asset is used for other business within the 8 years, there will be two impact. Number one, it will be deemed income under 35 AD 7B. With what will be my deemed income? The amount of deduction that I have claimed under 35 AD. Whatever deduction I have claimed under 35 AD minus the notional depreciation under 32. Because if I would have not claimed the deduction under 35 AD, I would have still been allowed the depreciation. Right? if it's an ineligible asset or even if it's not a specified business, you would still allow me a depreciation on capex. So amount of deduction under 3580, if you are treating it as my income, at least reduce the notional depreciation which I was already eligible for. And what will be the actual cost of asset for the non-specified business for the purpose of depreciation? The actual cost will be the actual cost minus the notional depreciation. If the asset is transferred to another business after 8 years, then the actual cost for depreciation will be nil and there will not be any deemed income. What if the asset is transferred or discarded before the 8 years? Then there will be income under 28.8. So 28.7. Are we getting this? Yes or
ma'am.
no?
Yes, ma'am.
Okay. So
Yes, sir.
now if I again go back to this particular same question.
Ma'am, this depreciation is allowed every year or for that particular year only?
Depreciation, sorry, I didn't get it.
This notional depreciation is there, no? That will allow for that particular year or continues for every year this depreciation will be allowed.
So see, here, first of all, how many years you have claimed this deduction, right? And you have to allow the notional depreciation against whatever you are adding back. So for the same thing, you have to allow even the additional depreciation. So it can't be that, okay, you have only purchased, like if you're claiming the deduction for 2 years, you will reduce the notional depreciation for 2 years. If it is for 1 year, then you will allow it for 1 year, like that. Fine. So if you look back to this particular example, let us go back and see here. See, here it has commenced the operation on 1/4/2023 and it had claimed the deduction of incurred on the purchase of 2 buildings for 50 lakh each. Alright. So that is for AY 24-25. So 23-24 previous year, it claimed the deduction for 1 year. And in February 25, it transferred the one of the units to building unit B. Right? Now, in this particular case, what you have done is, you have transferred the business in the next particular year. So, how many years you have claimed the deduction under 3580?
1 year.
Only 1 year. So, what will be your deemed income over here?
50 lakhs, which I have claimed deduction under 35 AD less depreciation, notional depreciation on
Correct.
the 50 lakhs for 1 year.
Correct. So, here, what you have done is, you have claimed it only for 1 year. Right? So, when the assessee transfers the building or transfers the asset to a non-specified business, then in that particular case, you have claimed it only for one particular year itself. So if the asset is used for other than the specified business during the 8 years, right, within that 8 years, beginning the year in which you acquire the asset, so the total amount of deduction that you have claimed and the whatever it is reduced by the depreciation allowable for those particular years, you have to treat it as deemed income. So let's say, for example, if in this illustration, I would have claimed the deduction in, let's say, previous year 22, 23. So then what would have been my deemed income? Yes.
50 lakhs minus notional depreciation on the 50 lakhs for 2 years.
Correct. So here what you would have done, notional depreciation then for 2 years. Right? So here it will be deduction allowed is 50 lakh, less depreciation 10% for 1 year, which is 5 lakh. Otherwise, what I would do is 50 minus 5 and then again on 45, again 10%. Right? You don't do 50 into 10% into 2. You have to go it on WDV basis. So this is what will be your deemed income under 45 lakh. And for the other business, again, your actual cost will be 45 lakh. Are we clear, students? Yes or no? Any questions, any doubt? Yes, is this clear to everyone?
Clear now.
Fine.
Yes,
Okay.
ma'am.
Let us move to the next question then. Now, next question is going to be a full-fledged question for you. Let us look at it. Give me a minute. Yes. ISAC Limited is a company engaged in the business of biotechnology. The net profit of the company for the financial year ended 31st March 25 is 35,25,890 after debiting the following items. So let us look at each of the items one by one. Purchase price of the raw material used for the purpose of in-house research and development.
Allowed
100%
100%.
Allowed?
Yes, ma'am.
Yes. So why is it allowed? What is the reason you will give here?
As it is for raw material for the purpose
So
of research.
correct. This is purchase price of raw material used for the purpose of in-house research and development. Under which section are we allowing it?
35.
35, which is the
37.
scientific. Yes, 35 2AB. What if I would have gone into the new scheme? Would you allow this?
Yes, ma'am. Since it is in-house, it is allowed.
Correct. If it is in-house, this is allowed. So here they have said that assume that the company does not opt for the provisions of 115 BAA, but I'm just asking you that what if it opts for 115 BAA, what expenditure we will allow, okay? Purchase price of asset used for in-house research and development land.
Not
Not
allowed.
Land not allowed.
Why? Sorry.
Ineligible as well. Land.
Ineligible asset, land is not the ineligible asset. So under 35, you will not allow this as expenditure. Building 3 lakh,
Allowed.
allowed.
under which section?
35.
Under 35.14. Okay. What about if I go for the new scheme, whether this building will be allowed?
Allowed, ma'am. Since it
Yes,
is
ma'am. Allowed. In-house.
In-house.
in-house research allowed.
This is in-house research. So even if it is a capital expenditure, right? This will be allowed under 115 BAC, BAA, BAB, BAD, BAE, even if it is a capital expenditure. However, what is not allowed is the land expenditure, right? So capital expenditure for the land, it is not allowed. Fine. What if this was pre-commencement expenditure? Pre-commencement capital expenditure.
Allowed, ma'am.
Allowed, ma'am.
Yes, ma'am.
Capitalization
Allowed.
was 3 years before.
Yes, very good. So pre-commencement capital expenditure or the revenue expenditure both are allowed. However, this expenditure should have been incurred at least, within the 3 years prior to the commencement of the business. So only the capital expenditure and revenue expenditure incurred 3 years prior to the commencement of business is allowed. Whether this is allowed under the new schemes also?
For in-house, it
Yes,
is
ma'am.
allowed.
Yes. For in-house, even the pre-commencement capital expenditure or revenue expenditure is allowed provided it is incurred within 3 years before the commencement of the business. Expenditure incurred on the notified agricultural extension project.
Allowed.
Allowed.
Under
Old
which
regime.
section?
35 triple C.
Correct. Expenditure incurred on notified agricultural extension project is allowed under 35 triple C. Whether allowed under new scheme or concessional tax regime?
No, ma'am.
No,
Not
ma'am.
allowed.
No, it is not allowed. Expenditure on notified skill development project, purchase of land 40 lakh.
Not allowed.
Not
Purchase of
allowed.
land.
Right? So 40 lakh we will disallow. Expenditure on training for skill development, 32 lakh 50,000.
Allowed,
Allowed.
ma'am.
Allow which section?
35 CCD.
35 CCD. What about the concessional tax regime?
Not allowed, ma'am. New
Not
scheme.
allowed.
Not allowed. Under concessional tax, only 35 in-house expenditure are allowed. These 35 triple C, 35 CCD not allowed. Expenditure incurred on advertisement in the souvenir published by the political party.
Ineligible expense.
Not allowed.
Not allowed.
ATGGP. Subject to ATGGP and ATGGC.
Yes. But which section it is disallowed? Yes.
37.
There. 37 2B disallows the expenditure on the advertisement in the souvenir published by political party. However, this will be allowed under which section?
Deductions IT, GGA, GGB.
80 GGB and GGC.
GGB.
Right? Yes. So these deductions will be allowed under those sections 80 GGB, GGC. But here, what they have asked, whether they have asked you to compute the total income.
PGBP.
Correct. They have asked you to compute the PGBP. So you will write a note over here, but you will not claim the deduction over here. And what is GGB for and GGC for? Who will get under GGB? Who will get under GGC?
Companies GGB.
Correct. Other than company, GGC.
GGC.
And the donation cannot be in
GGB.
no cash. No deduction for the cash contribution. Fine?
Ma'am, even if less than 2000.
Yes. So here for the political party, it is no deduction in cash. The 2000 limit which is there is under 80G, normal donation. For the political party donation, you don't have a limit of 2000.
2000. Got it.
Got it?
Yes, ma'am.
So, see, this is how, when we read too many provisions and we go for the examination, वहां पर क्या हो जाता है कि we are not able to recollect कि कहां पर क्या point था. Right? So, you may tend to make a lot of mistakes with these small aspects, which results in your entire sum going wrong.
Yes.
Right? So, when you do a lot of practice, then this gets just, ingrained in your mind. And what I used to do, at least for my CA final study, is like when these kind of points come, which are, kind of confusing, कि जिससे हो सकता है that I may make mistakes in exam. I used to make a separate notebook for those mistakes. Like, I will used to put a heading that commonly made mistakes to avoid in exam. And there I would put this one line for for 80G, donation in cash is up to 2000 allowed. But for GGB and GGC, no donation in cash is allowed. Right? Or I would write in the reading on the particular notes that I have for the 80GGB itself. So that will help me to remember during the examination. So कुछ भी आप छोटा point ऐसा है जिसमें आपको confusion हुआ है, just make a note of that point. Clear? Expenditure incurred on the issue of rights share, 80,000.
Not allowed.
Not allowed. Capital expenditure.
Capital expenditure.
So this is the expenditure in the capital field. So therefore, it will not be allowed as a deduction. Entire expenditure will be disallowed. Issue of debentures, expenditure on that,
Allowed.
allowed. Because this is not in the revenue field. Penalty paid under the GST Act.
Not allowed.
Not
Penalty.
allowed.
Not allowed which section? Which section? Yes?
40.
No. 37. 37 says any penalty for infraction of law is not allowed.
Ma'am,
Yes.
37 inadmissible admissions. Residual, 37 में
Residuary section, yes.
residuary section and 40 is purely for inadmissible deductions.
Yes. 40 is disallowances and 37 is the general deduction. In the general deduction under 37, they have clearly laid out that any expenditure which is incurred, which is prohibited by law or which is an offense is disallowed under the explanation 1. So there it will not be allowed. Fine. Okay. Next is interest paid on loan taken from bank for payment of advance income tax.
Disallowed, as it is
Why
related to
disallowed?
income tax. Income tax advance.
So here,
Not allowed.
yes, it will not be allowed because this is interest paid on loan taken from the bank for payment of the advance income tax. Now, this is not allowable since the same is not for the purpose of carrying out the business or profession. So under 37, to claim any residual expenditure, what are the conditions?
It has to be for the purpose of the business.
Correct. It should be an expense not covered under 30 to 36. It should not be a capital expenditure. It should not be a personal expenditure. It should be laid out wholly and exclusively for the purpose of business or profession. Is it wholly and exclusively for the purpose of business or profession? Answer is no. So this will not be allowed. Clear? Last one, provision for the loss of subsidiary.
Provisions not
Not
allowed.
allowed. Provision.
Any kind of provision is not allowed. What is the condition for allowing the provision? Yes,
Recovery.
no. When do you
Provisions,
allow the provision?
provisions are recognized in the books when the past obligation is there, because obligation arises for the company because of the past event, and
Hmm.
outflow of the resources, certain that there will be outflow from the of the resources from the SS, entity, and it is measurable.
Correct.
As
Very good. So as per ICDS 10, the provision shall be recognized only when the three conditions are satisfied. There is a pleasant obligation arising out of the past event. An event has occurred in the past because of which now there is an obligation of payout. There is a reasonable certainty that yes, there will be an outflow of resources. There will be an outflow of money to settle that particular obligation. And a reliable estimate can be made for the obligation. For example, provision for warranty. So only provision for ascertained liabilities are to be recognized, not for unascertained liability. Clear? So this provision will not be allowed, and this is what you have to write in the notes to the examination. Any question? Is this clear, student, this particular question?
clear, ma'am.
Yes, ma'am. Clear.
Okay. Next, we do some small illustrations from your module. Okay. Delta credited the following amounts to the account of the resident payee in the month of March without deduction of TDS. What would be the consequence of non-deduction of TDS at source? on the amounts, assuming that the resident pays in all the cases mentioned below, have not paid the taxes, if any, which was required to be deducted by Delta. Salary to its employees credited and paid in March 2025, 12 lakh.
30% disallowed.
30% disallowance. What if this particular employees were non-resident?
100% disallowed.
Correct, 100% disallowance. So if it is a resident, then in that particular case, 30%. If it is a non-resident, there will be 100%. And what if these particular employees have deposited the tax and have also filed their return? Then
No disallowance if they get the certificate from the CA that they have
correct,
deposited the tax.
correct. So in that particular case, here, if the employees have filed the return, have offered the income to tax and have paid the tax, then in that particular case, the expenditure will not be disallowed. The assessee will not be treated as an assessee in default. However, what will be the consequence? There will be interest on the TDS not deducted from the date on which the TDS was deductible till the date up till
Person has filed his return.
correct. Person has filed the return. So expenditure will not be disallowed. However, there will be interest from the date TDS is deductible till the date the return has been furnished. And what is the rate of interest which will be there?
1.5%.
No, 1%. 1.5 is for TDS not paid. The person has deposited the tax. So we are not charging 1.5. We will be charging only 1% because you have failed to deduct the TDS. Are we clear?
Yes,
And
ma'am.
in case he has not filed the return, then you will be allowed the expenditure in which previous year?
Payment in the year in which it has been.
Correct. Now tell me one thing, if this employee was a non-resident, and in that particular case, he has filed the return of income, furnished the return, offered the income and paid the tax on that income. Then in that case, the employees are non-resident, not resident now. What will happen in that case?
It's allowed, ma'am.
It is allowed. No disallowance will be made.
If we get proof that he has paid the tax.
No.
In
So
salary, it will be not allowed.
correct. So if you recollect, let me share you the screen again. So see, these are the small mistakes that we should not be making in examination. For a non-resident, only interest, royalty, FTS or any other sum chargeable to tax is covered under 40A1. Salary payable to a non-resident or outside India is covered under 40A3, which doesn't have any exception for the payer not to be treated as assessee in default. So under 40A1, 40A1A for the resident, you have an exception for the payer not to be treated as assessee in default if the payer has paid the taxes. But under 40A3, it is not there. And if a salary is paid to a non-resident on which the TDS has not been deducted, right, then it will be covered under 40A3 and there is no exception. And this disallowance is permanent. Meaning, even if you pay the TDS in next year to the government, still the allowance will not be made in the next year. Are we getting the difference? So here, if my employee was a non-resident employee, it would have been a permanent disallowance. In the next year, I would have not got the allowance of the expenditure, even if I would have paid and deposited the tax. Are we getting this?
Ma'am,
Yes.
Yeah.
suppose if he has authorized agent or authorized representative, an Indian person
Regarding like,
who is responsible for paying.
doesn't matter. So if he pays, then it's fine. If he doesn't pay, then it will be a permanent disallowance. It doesn't change any
Okay,
fact here.
ma'am.
Fine.
Yes, ma'am.
So you have to be very careful when you read the question. If it is a non-resident employee, there is no exception. Clear? Then
Yes, ma'am.
director remuneration credited in March and paid in April 2025, 28,000 on which the TDS has not been paid. Is first of all
30%
TDS required on 28,000?
Yes, ma'am.
Why?
For directors limits, 30,000 is not there.
Correct. For director, there is no limit under 194G. So TDS is required. Now, whether there will be disallowance?
30%.
30%. Correct? If the director was my non-resident, still the same thing. 100%, right? Then it would have been, instead of 30, it would have been 100%. So this 30% will be disallowed. Now, the second part of the question is, what if the tax has been deducted or in April 25 at the time of payment and remitted the same in July 2025?
Then next year deduction will be allowed.
Next year, deduction will be allowed. That's right. So if the tax is deducted in the previous year 25-26 and the payment is made after that, the deduction will be allowed in the next year. Clear? If the
Yes,
tax
ma'am.
was deducted earlier and the payment is made before the due date of filing of return, it will be allowed in the same year. But if the tax has not at all been deducted, it will be allowed in the next year. Any questions, any doubt? Yes? Is this clear, students? Yes or no?
Yes, ma'am.
Yes, ma'am. Clear.
मैम डायरेक्टर इफ डायरेक्टर वाज एनआरए तो रेन्यूमरेशन तो सैलरी के नीचे नहीं आएगा ना?
नहीं. If it is a whole-time director, salary में आएगा. If it is not a whole-time director, if it is part-time director, then it will come under 40 a month as a technical service fee. Clear?
So for NRI, if it is not a salary for a director, then
Correct.
it will be allowed later.
Correct.
Okay.
Next illustration. During the financial year 24-25, the following payments or expenditure were made or incurred by Mr. Yuva Rajan, a resident individual whose turnover was 99 lakh in the year 31st March 2024. Interest of 45,000 was paid to Rahman and Company, a resident partnership firm, without the TDS. Sorry, I think. Yeah.
It is allowed
Why?
because its turnover is not more than 1 crore.
Correct. His turnover is not more than 1 crore in the last year. And under 194A, you are required to deduct the TDS only when your turnover of the previous year is more than 1 crore. Right? So he is not required to deduct TDS. He is not deducted. So expenditure will not be disallowed. What about 10 lakh paid as salary to resident individual?
Thirty
30%
percent discount.
is allowed.
Correct. But here, the requirement of 1 crore, whether it is there or not,
No, ma'am.
No,
192.
ma'am. Above
TDS.
basic exemption limit is there.
See, under basic exemption limit is for the pay. For the payer, this turnover threshold is there. So under 192, there is no condition like that the payer should have turnover more than 1 crore in the last year. That condition is there under 194A, 194J, 194C, H, like that. It is not there under 192. So if the salary is paid to any person which is more than the basic exemption limit, in that particular case, the payer is required to deduct the TDS whether or not his turnover is more than 1 crore in the last year. And in this case, he was required to deduct. If he has not deducted, 30% will be disallowed. Clear?
Yes,
Commission
ma'am.
to Vidyasagar, 16,000 without deduction of TDS.
No disallowance. His turnover does not exceed 1 crore.
The turnover does not exceed 1 crore. So therefore, in that particular case also, it is not allowable. It will be allowable. There is no disallowance. Fine. So you have to see each and every provision carefully in this particular case. Any questions, any doubt till now? Fine. Okay.
Yes, ma'am.
Okay. Let us see the next question then. Okay. Hari, an individual carried on a business on purchase or sale of agricultural commodity like paddy, wheat, etc. He borrowed loans from Andhra Pradesh State Financial Corporation and Indian Bank has not paid the interest as detailed at under. So this is for previous year 23-24 and for this is for 24-25. Both APSFC and Indian Bank, while restructuring the loan facilities of Hari during the year 24-25, converted the above interest payable by Hari to them as a loan repayable in 60 equal installments. During the year ended 31st March, Hari paid 5 installments and 3 installments to Indian Bank. Hari has claimed the entire interest of 45 lakh as an expenditure while computing the income from business of purchase and sale of agri commodity. Discuss whether his claim is valid and if not, what is the amount of interest, if any, allowable. So first of all, whether the 45 lakh is a valid claim?
No, ma'am.
Why?
Because it is a restructuring of loan. So only whichever interest is paid by him, installment, that will be allowed.
Right. So where does this payment of interest condition comes from?
43B.
43B, correct? What does 43B tells us? 43B tells us that the expenditure can be claimed as deduction only when the expenditure is actually paid,
Paid
right?
before due date.
And
Yes.
if you look at 43B, it talks about any sum payable by way of tax, duty, cess or fee. Secondly, it talks about, I think you just hand one second, yeah. Any sum paid by the assessee as an employer by way of the employer contribution to PF. Third is bonus or commission. Fourth is interest on any loan or borrowing from any public financial institution, SFC, or State Industrial Investment Corporation, or from any non-banking financial company, or from a scheduled bank or a cooperative bank. Right? Or any sum paid in lieu of the leave encashment. So these are the deductions which are subject to the allowability only when the payment of these expenditure are made on or before the due date under 139(1). Fine. So with regard to the interest expenditure, there is an explanation which is given which says that if any sum payable by the assessee as an interest is converted into loan because he is not able to pay the interest itself gets converted into loan. And therefore, the liability to pay is deferred to a future date because loan is not payable anymore at this point. So the interest, when it gets converted into loan, the payment is not done. The liability is in fact deferred to a future date. So the when interest gets converted to loan, it will not be allowed as deduction because this is not actually paid. Right? When will you allow the deduction of that interest? When that repayment of loan is made. Right? When the repayment of loan is made. Are we clear?
Yes, ma'am.
So in this particular case, this 45 lakh will not be allowed as deduction. That is very clear. Now, out of that, Hari has paid 5 installments to APFC. Out of the 60 installments. So 15 lakh into 5 divided by 60. 30 lakh into 3 divided by 60 is what will be allowed to me as the deduction. So this is what is allowable. So total amount eligible for deduction here will be 2,75,000. Are we clear? Any question, any doubt? Fine?
Yes, ma'am.
Yes. Okay, any questions till now?
Clear, ma'am.
Fine? Okay. Now here one more question that I would want to take with you is, which is basically any sum payable by the assessee to a micro or small enterprise beyond the time limit specified in section 15 of MSME Act would be allowed as deduction only in the year in which the sum is actually paid. Now here, first of all, the linkage is not with respect to the year of payment with respect to the filing of return of income. Are you getting this point?
Yes, ma'am.
So, for all the others, tax, duty, cess, employer contribution to PF or SAF or gratuity fund, bonus or commission to employees, interest on loans, leave encashment, the time limit is deduction is allowed if the payment is made before the due date of filing the return of income under 139(1). If you do not pay within that time limit, the deduction will be allowed to you in the next year. However, for the sum paid to the MSME, for the sum paid to the MSME, under that also we are only covering two, micro and small, not medium. So if the sum is paid to a medium enterprise, that is not subject to 43B. Right? If the sum is paid to a micro and small enterprise, it is covered under 43B. Now for that, the condition is that the payment should have been made as per the time limit of 15 of MSME. What is the time limit of 15 of MSME? Let us understand.
15 days from the
Correct.
date of purchase.
Correct. So, one second. Let me again reshare the notes that we have done for this. Yeah. So, the time limit is if there is no agreement between the MSME and the payer. The time limit is 15 days. However, if there is an agreement in place between the buyer and the seller, the time mentioned in the agreement. Right? That if the invoices have to be cleared within this time. Or maximum 45 days from the date of acceptance of agreement. If there is no agreement, the time limit is 15 days. If the agreement exists, the time mentioned in the agreement of 45 days, whichever is earlier. So whenever you make the payment to a micro or a small enterprise, if you pay within this time limit provided under section 15, which is if there is no agreement 15 days, if there is an agreement between the date of agreement or 45 days, then 43B is not applicable. And deduction can be claimed of expenses on accrual basis. However, if the time limit you are not following, if you pay beyond this 15 days or 45 days or this date in the agreement, then 43B becomes applicable. And the deduction will be allowed to you in the year of actual payment. Now, what is a small, micro and the small enterprise? So they say that the micro enterprise which is there, if the investment in the plant and machinery, if it is engaged in the manufacturing or production of goods, the investment in the plant and machinery is less than how much? 1 crore rupees. And in the case of, this is not 25 lakh, this has changed. 1 second. Need to change this. Investment in the plant and machinery is, 1 second. So this I think we had not done during the PGBP, so you can write it now. So investment, if it is engaged in the manufacturing or production of goods, the investment in the plant and machinery is less than equal to rupees 1 crore. And the turnover which is there is less than rupees 5 crore. So investment in plant and machinery is less than equal to 1 crore and the turnover is less than equal to 5 crore. Right? So turnover is less than equal to rupees 5 crore. So I think this I'll have to remove it. There's no investment now for the equipment. Fine. And with respect to the small enterprise, what is a small enterprise? Investment in the plant and machinery is how much? Investment in the plant and machinery is less than equal to 10 crore and the turnover criteria is less than 50 crore. So, plant and machinery is greater than 1 crore but less than equal to rupees 10 crore and turnover is less than equal to rupees 50 crore. So these are the micro and the small enterprise. Medium is not covered. Are we clear? Yes or no? Any questions?
Yes,
Fine. So,
मैम
yes.
प्रैक्टिकल कंसिडरेशन देके जब टैक्स ऑडिट करते हैं there
Hmm.
will be lot of creditors for each client. So how
Hmm.
a auditor will find out that for each creditor it is MSME or not?
Good question. See, in that particular case, you have to take the declarations from them. You need to take a declaration that whether they are small enterprise, medium enterprise, like that. So, basis that you will be able to decide that whether you need to, and see, there may be agreements in between, there may not be agreements in between. So, wherever the agreements are possible, take that agreement. Wherever the agreements are not there, then you have the time limit already been there. Are we clear?
We have to take the declaration from the creditors right ma'am?
Yes. You have to take the declaration from the creditors itself.
Okay.
मैम एमएसएमई पोर्टल पे भी जाके वेरीफाई कर सकती हूँ जीएसटीएन नंबर से.
हाँ, तो लेकिन वहां पे भी देखो, अगर आपको जीएसटीएन कभी कभार जैसे इनवॉइस में तो देते ही है, बट कभी कभार अनरजिस्टर्ड भी रहते हैं, राइट? सो इन दैट पर्टिकुलर केस यू विल हैव टू देन take the declaration from them. But if it is a registered taxpayer, of course, yes, you are right. You can verify it from the MSME portal also.
Yes, ma'am.
Fine.
Okay. Okay.
So let us solve a one question on this particular point. I have, put one question here. So let us look at this. Mr. A has purchased the goods from Mr. B, which is a micro as per the MSME Act. of rupees 10,000 on 1st March 25. Date as per agreement in first case is 5/4/2025 and the sum is paid on 2/4/25. In which year you will allow the deduction?
Twenty-four, 25, 1/3/2025.
Correct. So why we will allow here in 24/25?
It is as per the date of agreement 5/4/25 and it is less than 45 days.
Correct. So here 43B doesn't come into picture because as the payment is made prior to the agreement, so deduction will be allowed on the accrual basis. When was it accrued? On 1st March 25. Here 43B doesn't come into picture. Yes? We will not allow in the next year. We will allow it on the accrual basis. You follow the accrual basis, right? You don't follow the payment basis. The only exception to accrual basis is 43B. Why we would come into 43B? 43B comes into picture when you have not made the payment as per the section 15 of MSME. Yes or no?
Yes,
Clear?
ma'am.
Okay.
Yes, ma'am.
In next day, the agreement is saying as per by 30th June 2025. And the sum was paid on 30th May 2025 when the payment, when the goods have been purchased on 1st March 25. So when is the deduction allowed? Sorry?
24,
Which year?
25.
25, 26.
In the previous year, 25/26.
Correct. Not in the previous year 24/25 because here the MSME section 15 is violated. Because the goods are purchased on 1st March, you have to maximum make the payment within 45 days, which is maximum by 15th April, right? So here you have made it on 30th May, right? Because the agreement says 30th June, but we can't consider that. The earlier event is 45 days. So then MSME Act says that the year in which you make the, section 43B says the year in which you make the payment, then in that year you will get the deduction. Because you have breached the time limit of 45 days. Clear? In the next case, there is no agreement. And, here I think it is removed. The payment is made on 1st April 25. So in which year you will allow?
Previous year 25/26.
Correct. Because here there is no agreement. So whatever the time, what is the time limit?
15 days.
15 days. So you have not made the payment within 15 days. So therefore, as per the section 43B, deduction will be allowed in the next year 25/26. Are we clear, students? Yes or no?
Yes, ma'am.
Fine. Okay. Okay. Let's take a break here of 10-15 minutes and then we start again.
Okay.
Start with the next question now. We are moving to a more full-fledged question now. Let us solve this question. Question number 6. Let me reshare the screen again. Yeah. The trading and P&L of Pingu Trading Private Limited, having business of agricultural produce, consumer items, and other products for the year ended 31st March is given. So they have given the sales, closing stock, opening, purchase, freight and cartage, and GP is this much. And then they have income tax refund, warehousing, bonus to staff, rent of premises, advertisement, bad debts, interest on loan, depreciation, GST, miscellaneous, and this is the net profit. Now, on scrutiny of the records, the following further information and details were extracted or gathered. There was a survey under 133A on the business premises in which it was revealed that the value of closing stock was 8,75,000 and a sale of 75,000 made on 13th March 2025 was not recorded in the books. The value of the closing stock after considering these facts and on the basis of inventory prepared by the department as of 31st March worked out at 12,50,000, which was accepted to be correct and not disputed. So we'll go one by one here. Tell me what will be the impact of this particular information which is given. So here you have been given the closing stock, opening stock, sales and purchases. And there is this information which is given below, which is saying that this is what is the value.
Ma'am, profit will be increased.
How
Sale
much?
was sale was not recorded for 75,000, so we will be increasing the sales by 75,000. And moreover, the inventory was 12,50,000, and it was only 4,50,000 in the books of accounts. So difference amount will be added.
So first of all, here they have said that the sales has not been recorded. Right? So there is a difference in the value of stock detected on the survey under 133A. Right? So, survey is something where, for example, that the income tax department would officers would come and check that what you have shown in your books of accounts is correct or not. So here they have surveyed and there were differences in the opening, closing stock and sales. And the associate also accepted it. He has not disputed, right? So what we need to do is we need to recast the trading account to arrive at the figure of the correct gross profit or the net profit, right? Because then only you will be able to make the adjustments. So my sales, which is appearing as 1,55,50,000, to that I have not recorded the amount of 75,000. Yes or no? So I will have to re-record that as well. Yes, are we getting this particular point? So here I need to re-record this particular amount of the sale and the closing and opening stock so that I arrive at the correct figure of the gross profit. Because that will be, students, my starting point. Yes or no? So what will be the value of the closing and the opening stock that you will take here?
Opening 8,75,000, closing 12,50,000.
Correct. So opening I will take as 8,75,000 and closing how much?
12,50,000.
12,50,000. Correct. So balance the freight and cartage, you will get that.
Yes, ma'am.
Correct. So basis that I will have to recast my entire this thing. So it will appear something like this. Isn't it? So this is how I will, recast my gross profit here, and basis that I will have to arrive at the starting point of my question. So what they have said is that 75,000 first we will add. My closing stock is 12 lakh 50, which is there. And my opening stock was 3 lakh 75,000. However, 8 lakh 75,000 is the correct value. So I'll start with that. Balance things, I will take it as it is, as the question gives me. And this will be my starting point, which will give me the gross profit of 32 lakh 99,000. Now, what is the gross profit that we have reported there? The gross profit that we have reported was 29 lakh 24,000. Right? So what I will do over here is 32 lakh 99,000 minus 29 lakh 24,000. This will be 3 lakh 75,000 will be considered as an adjustment to my income as the undisclosed income. Now, what is the tax rate on the undisclosed income?
30%,
No.
60%.
60%.
60%.
So, the undisclosed income is taxed under which section?
60/40.
No. Under which section? Sorry.
69.
69.
69. Correct. But the tax rate is given under which section?
115.
BBE. 115 BBE. So 69 is the section for the undisclosed income, and the income tax on that is given under 115 BBE, which is what? 60%. Are we getting it? And then 115 BBE tells you that no deduction of any expenditure, any allowance, any set off of losses will be allowed against this particular income. Are we getting this particular point? So
Yes,
here
ma'am.
you will not be allowed any deduction of the expenditure, any set off of the losses. So no brought forward losses can be allowed against this particular set of income. Are we clear? Yes or no? Any questions, any doubt?
Clear now.
Yes, ma'am,
Yeah.
clear.
Okay. So let us go back to this particular question now. So here, this is the adjustment that we will make. So let me go back to the question. Okay. Next adjustment is income tax refund includes amount of 4570 of interest allowed therein. So here they have given us the income tax refund in the P&L 20,000. So what will be the adjustment here?
Ma'am, income tax refund is not for business purpose. Personal. So we will reduce from the income net profit of 20,000.
Income tax refund is not taxable.
Correct. So income tax refund is not taxable. So we will reduce it from the income tax amount of the income tax refund. But what about the interest?
Income from other sources.
Correct.
Okay.
Why it will not be considered under the PGPP?
Because it is not related to business, it is the additional interest which we get on the amount of income tax which we have paid.
Yes, very good. So you will write this point in the exam that the interest is chargeable under income from other sources if it is not chargeable under any other head. Now, this is not connected to my business, and therefore interest on income tax refund will be chargeable under the income from other sources. Clear? So this is how you will be writing the note in the examination. Fine. Next one is bonus to staff includes an amount of 7,500 paid in the month of December 24, which was provided in the books on 31st March 2024. So here they have given some bonus to the staff, which is given in the P&L. So what shall be the impact?
Allowed in the year of payment subject to 43B.
Correct. It is allowed in the year of the payment. So bonus to staff is 47,500. out of which they are saying only 7,500 is paid in the month of December. So when it will be allowed?
In the previous year, 24-25.
24-25.
So bonus, but one second. If you look at it, this is provided in the books for 31st March 2024. This is for the provided for the books in the 31st March 2024. So be careful. It says bonus for the year ended 31st March 2024. Which year are we looking into?
23-24.
No, the question is pertaining not to the year 23-24. The
The
question
question is
pertains to year
for
24-25. This is P&L for the year ended 31st March 25. And this adjustment that they have given for the bonus, they are saying that the bonus which is included over here in the expenditure, this was provided in the books on 31st March 2024. Are you understanding the difference?
Yes, ma'am.
So this was considered in the profits of last year, but it might have been disallowed at that point in time. So we will have to write a note in the examination that this bonus to the staff pertaining to the previous year 23-24, which is there, this is basically paid after the due date for filing the return of previous year 23-24. So therefore, it would have been disallowed in the 43B for the previous year 23-24. And when the same is paid in December 24, it should be allowed as a deduction for the previous year 24-25. And since it is already included in figure of bonus, no further adjustment is required. Are you understanding?
Yes.
This will be allowed this year. Clear?
Yes,
Fine?
ma'am.
Okay. Next adjustment that they have given is rent of premises includes an amount of 5,500 incurred on repairs. The assessee was under no obligation to incur such expenses as per the rent agreement.
Allowed.
Allowed, disallowed?
Allowed.
Allowed, ma'am.
Under which section are we allowing it?
30.
So, repair expenses which are incurred by the assessee are allowed under section 30 even if he was not obligated to incur such expense. He has incurred, it will be allowed even though it was for the rented premises. But the same should be, the premises should be used for carrying on the business. Are we clear? So, the expenditure which is there on the repairs should be done for the business premises. Are we getting this point? It should not be done for some premises which are not connected to the business. So if it is used for the business purposes for carrying out the business effectively, in that particular case, the expenditure will be allowed. Now the question here pertains under which section we will allow this expenditure.
$36.
General deduction.
Why not 30? Yes, under which section are we going to allow it? That is also very important. Yes. What does 30 says? Yes, students, faster. Under which section it will be allowed?
Yes, it would be allowable under section 30.
30 or
Under
37?
30
Seven,
repair will be
37, sir.
30 or 37?
ma'am, 30 ma'am, because in
37.
30 rent repair is there in 30, right? So if it is in 30, then we will be allowed on the 30. 37 is a residual section. If it is not allowed on from 30 to 36, then we will be taking into 37.
Yes. So 30 says where the premises are occupied by the assessee, right? The repairs will be allowed only when he is actually owning the premises. So let me share you what does section 30 says. Let me share you that. Look at section 30. Aspect of rent, rates, repairs and insurance. Repairs is covered under 30. Used for the purposes of business or profession. The following deductions shall be allowed. Where the premises are occupied by the assessee as a tenant, the rent paid for such premise. If the assessee is occupying the premises as a tenant, rent paid will be allowed. And if he has undertaken to bear the cost of repairs to the premises, the amount paid on repair. So if he has accepted, he is obligated that he will take care for the repairs, then the repairs will be allowed. In our question, what the question said, he has not undertaken any obligation to take the repairs, but he has done it. So one can argue it will not be allowed under 30, it will be allowed under 37. Because 37 is the general expense. What is not covered under 30 to 36 will be allowed under 37. If he is under 30, if he has said it, okay, I will take care of the repairs, then you can allow it under 30. So you can write this viewpoint in the examination. Are we clear about this, students? Yes?
Yes, ma'am.
Okay. So here if you see this, it is saying that repair expenses on the rented premises where assessee is under no obligation to incur such expenses are not allowable under 30. However, if such expenses are required for carrying on the business efficiently, the same are allowable under 37. In this case, assuming that such expenses are required for carrying on business efficiently, the same are allowable under 37. Clear? Any questions, any doubt? Yes or
Clear,
no?
ma'am. Clear,
Okay.
ma'am.
Next is advertisement expenses include an amount of 2,500 paid for advertisement published in souvenir paid issued by the political party. The payment is made by way of an account paid check.
Disallowed, ma'am. 37 to be.
It will be disallowed under 37 2B, right? Because payment to the political party we just now discussed that it is not allowed. Under which section you will claim the deduction? Yes.
80 GGB.
GGB.
Because it's a company, you will claim under 80 GGB since it is not paid in cash. So this will be allowed under 80 GGB. Clear? Next is miscellaneous expenses include amount of 15,000 paid towards the penalty for non-fulfillment of delivery conditions of a contract of sale for the reasons beyond the control. Yes.
It's allowed, ma'am.
Allowed, ma'am.
Now,
Allowed, ma'am.
but this is penalty, isn't it?
It is not
It's
against
not,
any.
So penalty which is paid for non-fulfillment of delivery conditions of a contract. This is a violation of the contract and not the breach of law. Right? 37 says you what? Section 37 says that an expense will not be allowed as a deduction, or the explanation to section 37 talks about that the expenditure will be which is paid, which is incurred for an offense which is prohibited by a law. For any offense or which is prohibited by law. This is a contractual violation. Right? So here the disallowance will not be made. So this will be allowed as the expenditure. Clear? 1 lakh paid to the wife of a director who is working as a junior lawyer for taking an opinion on disputed matter. The junior advocate of High Court normally charges 25,000 for the same opinion.
75,000 disallowed.
Yes.
Under which section we will disallow?
40 section 3.
48. So 25,000 is the reasonable payment. They have paid it 75,000. So in this particular case, they have paid 1 lakh. So 75,000 will be disallowed as an expenditure as the excess payment under 48(2) because director's wife is a related party covered under 48(2). Remember? So you have to write that this is a related party. Clear?
Yes, ma'am.
Okay. Amount of 1 lakh paid to an electoral trust by check.
Disallowed.
Disallowed under 37 again. And this will be allowed under which section?
80 GGB.
80 GGB. This is again paid by check, so therefore allowed. GST demand paid includes an amount of 5,300 charged as penalty for delayed filing of returns and 12,750 towards interest for delay in deposit of tax.
5,300 is not allowed, ma'am, since it is penalty. Interest is allowed.
Correct. 12,750 is the interest. Interest on GST will be allowed. 5,300 is the penalty, which is for the breach of law, so that will not be allowed. Clear?
Yes, ma'am.
Company has made an investment of 25 lakh on the construction of a warehouse in rural area for the purpose of storage of agricultural produce. This was made available for use from 15th September 2024 and the income from this activity is credited in the P&L under the warehousing charges. So what will be the effect?
Ma'am, specified business 35 AD, warehouse for the agriculture produce. Under 35 AD, we can calculate profit from the warehouse 15 lakhs separately and we can take the capital expenditure of 25 lakhs.
Correct. So first of all, you will segregate the income over here. First of all, we will segregate the income over here. The income from the warehousing charges that they have mentioned in the question, which is of 15 lakh. Right? So this is how we'll do it. Income from the specified business, which is here 15 lakh. Then they have said that what is the warehousing, the charges that they have paid? 25 lakh. Right? So this
Yes.
is deduction under 35AD as a 100% of 25 lakh. Right? So 10 lakh is coming as a loss. Now what will happen to this loss? Will I allow this?
No, ma'am, carry forward.
Correct. So loss from the specified business cannot be offset against the income from other business and this has to be carried forward. However, for that the return has to be filed before the due date under 139(1). Are we clear? Next is depreciation under the income tax works out as 65,000. This is very simple. You will add back the depreciation, right, under the books of accounts and you will allow this 65,000. Clear?
Yes.
Next is interest on loan includes an amount of 80,000 paid to Mr. X, a resident on which TDS was not deducted.
30% is
Disallowed.
Correct? 30% will get disallowed. So that will be added to my income. Fine. So this is how you will compute your business or profession. Let us just have a look at if we have missed any adjustment over here. I think bad debts is allowed, right? Because this is not provision for bad debts. This is bad debts. Interest on loan we have taken. GST which is allowed. Rent of premises is allowed under 30. So this is all what we have under the P&L and the trading account. Fine. Any questions with respect to this question? Yes?
Clear, ma'am.
Clear?
मैम इसमें जो रेंट था, रेंट ऑफ प्रीमाइसेस, अगर इस पे हम आरसीएम भी पे करते और उसका इनपुट क्रेडिट अवेलेबल नहीं होता, फिर क्या करते हैं?
You see, there are two things. Input credit जो है आपका GST के अंदर है, ठीक है? तो when you do the accounting, right, you have to take on the inclusive basis. You have to add all the GST liabilities that you have taken and you have to reduce all the GST credits. Or you can follow an exclusive method also wherein you are taking all the items to the balance sheet. So एक इफेक्ट हो सकता है जब आप सेल वैल्यू इनकम्स जो इंक्लूड कर रहे हो उसमें ही जीएसटी ऐड कर दो, एक्सपेंसेस जो इंक्लूड कर रहे हो उसमें भी आप जीएसटी आपने जितना पे किया है वो ऐड कर दो. So net effect will be your profit will remain the same, right? Because there will be either GST payable, which you would have paid, or there will be a GST refund on your credit side. If you follow the exclusive method, means you are taking all the figures excluding GST in the P&L, and you are taking the GST paid in the balance sheet and GST collected again in the balance sheet, and the net amount is either refund receivable or the GST payable. So that doesn't impact your tax liability per se. Clear?
Yes, ma'am.
Fine. Any doubt, any other question? Okay, let us move to the next question then. We solve this particular. Compute the quantum of depreciation available under 32 in respect of the following items of plant and machinery purchased by PQR Textile by paying through the account paycheck which is engaged in the manufacture of textile fabrics for the year ended 31st March. Assume company does not opt for 115BA or BAB. Okay. So here they have given the, I think this is just getting hanged here. New machinery installed on 1/5/24. New windmill, lorries, and they have given the items purchased after 30th November. The new imported machinery arrived at Chennai on 30th March and was installed on 3rd April. All other items were installed during the year 31st March. The company was newly started during the year. You are required to compute the WDV of various block of assets on 425 after charging the depreciation for previous year 24-25. Fine. So first we'll start with this newly installed machinery on 1/5/24. What will be the effect? What is the rate of depreciation on that?
15%, ma'am.
15%. What will be the period year? Fully allowed. What will be the case?
Fully allowed.
Fully allowed. Yes. Fine.
Yes, ma'am.
So on 84, you will allow the full depreciation. Right? It is not for the part of the year. It is for the full year that it is available. It is not put to use for less than 180 days. So here you will get the entire amount of depreciation. Next is new windmill purchased and installed on 18 June 2024. What is the rate of depreciation on windmills?
मैम एडिशनल डेप्रिसिएशन भी मिलेगा ना मैम मैन्युफैक्चरिंग ऑफ टेक्सटाइल.
Correct. Additional depreciation भी मिलेगा. It is manufacturing of the textiles. Yes. So on 84, you will get the additional depreciation also. What about the windmill?
Full
What is the rate?
15%, ma'am. 15.
40.
Windmill is not
40%.
40%.
Windmill is 40%. And whether you'll get the additional depreciation on windmill?
Yes, ma'am.
We'll get the additional depreciation on windmill, right? So windmill and any design devices which are running on the windmill would be eligible for depreciation at the rate of 40%. Plus, it will also be eligible for the additional depreciation. Are we clear? Next is lorries for transporting goods to sale depot, purchased and put to use in July. What is the rate of depreciation on lorries?
15%.
15%. Correct. Is it eligible for additional depreciation?
No, ma'am. Road transport not allowed.
Correct. So, if you remember, I told you for additional depreciation, the road transport vehicles are not eligible. Right? So, for the any office appliances, road transport vehicles are ineligible for additional depreciation. So, lorries which are used for transporting goods are available for 15%, but they will not be eligible for the additional depreciation. Clear? Then these are items purchased after 30th November. Means these will be eligible for half the rate of depreciation, isn't it? Because they are installed and put to use for less than 180 days. Clear? Forklift trucks used inside the factory.
7.5%.
7.5%, that's right. So, what about the additional depreciation?
Yes, ma'am, allowed in this case.
Allowed in this case because this is used inside the factory. This is not a road transport vehicle. So for this, you will get the additional depreciation, students. Clear? Computers installed in the office premises.
20%, no additional depreciation.
20%.
20%, no additional depreciation. Computers installed in the factory.
20% additional depreciation is allowed as it is in factory produced.
Additional depreciation also in this particular case. New imported machinery. This arrived at Chennai port on 30th March and was installed on 3rd April.
Not allowed, ma'am. Since it is put to use in the next financial year, it will be not allowed. No depreciation.
Correct. So these particular new imported machinery is not put to use during the current year. So therefore, this will not be eligible for the depreciation. For this particular year, it will be available in the next year. Fine. Any question, any doubt? Clear?
Yes, ma'am.
Okay. Let us then move to the next question. Let us move to question number 9. Alpha Limited, a manufacturing company, has disclosed a net profit of 12.5 lakh for the year ended 31st March. You are required to compute the taxable income of the company for the AY 25-26 after considering the following adjustment or information, duly explaining the reason for each item of the adjustment. Advertisement expenditure debited to the P&L includes the sum of 60,000 paid in cash to the sister concern of a director, the market value of which is 52,000.
8,000 disallowed. 48
8,048. Other than that,
it is paid in cash.
2,000 fully disallowed, ma'am. Paid
Fully
in cash.
disallowed, ma'am. Paid in cash. Paid in
correct.
cash.
So here there are two impacts. Number one, this will be fully disallowed, right? Plus, there will be also 48.2 and the balance amount will be under 48.3. The expenditure will be 60,000 fully disallowed. But you have to break up into two sections like this. So 8,000 being the excess payment to a relative disallowed under 48.2. As payment is made in cash, the remaining amount of 52,000 will be disallowed under 48. So one is covered under 48 because of the specific section which is covering this particular payment to a relative in excess 8,000 and the other for the cash expenditure. Clear? So this is how you will show the presentation in the examination. This is very, very important. You can't be directly saying 60,000 disallowed. You have to break it into two parts. Clear?
Yes,
This is how you have to present. Okay? Repairs of plant and machinery debited to the P&L includes the 1.8 lakh towards the replacement of the worn out parts of machinery. Such expenditure does not increase the future benefit from the asset beyond its previously assessed standard of performance.
Since it is in revenue nature, it is allowed because it is not increasing the life of the asset.
Correct. So here you have to make the presentation like this. Under 31, you have to mention the section numbers as far as you can remember. So the current repairs are allowed under section 31. These are not the capital expenditure because they do not enhance the performance of the asset or do not give the benefit of the enduring nature. Do not bring into existence any new asset. So therefore, these are current repairs. As per ICDS 5, only the expenditure that increases the future benefit from the existing asset beyond its previously assessed standard of performance has to be added to the actual cost of the asset. So you have to quote ICDS 5, you have to quote section 31 that this is current repair and therefore no adjustment is required. Clear? So this kind of referencing are important in the examination. And you have to start practicing so that you are able to use these words. Does not give any enduring benefit. Does not bring into existence a new asset. Does not increase the future benefit from of the asset beyond its previously assessed performance. Clear? Sum of rupees 6,000 on account of liability foregone by a creditor has been taken into general reserve. The original purchases were debited to the P&L in AY 2021.
Deemed income 41.
Correct. So again, you need to make a note like this that the liability foregone is chargeable as a deemed income under 41(1) even though it is not credited to the P&L. And the same was allowed as a deduction in the previous year. If you recollect for the 41(1), what did I tell you? For the 41(1), the condition was that there has been an expenditure which has been allowed as a deduction. Right? So if that is now reversed, then in that particular case, where a deduction is claimed in respect of a loss, expense or trading liability incurred by the assessee, and in the subsequent year, there is a benefit arising due to the remission or cessation of the liability, and in this case, there is the liability foregone. So then it will be considered the benefit shall be deemed to be the PGBP of the previous year in which the benefit is obtained. So you have to write this, that as per section 41(1), where a deduction is claimed in respect of a loss, expense or a trading liability incurred by the assessee. And now in the current year, there is a remission, but there's a benefit arising due to remission or cessation of liability. Clear? Yes or no? Yes?
Clear?
Yes.
Sale proceeds of import entitlement amounting to 1 lakh has been credited to the P&L which the company claims as a capital receipt not chargeable to income tax.
Allowed. Section 28.
This will be considered as an income. This is not allowed. This is considered as an income under 28. This is already considered as an income. So therefore, no further adjustment is required. So sale of right is basically taxable under 28(3)(a). And therefore, since it is already considered, no further adjustment is required. Yeah. Next is being also engaged in biotech business, the company incurred the following expenditure on in-house research and development as approved by prescribed authority. Research equipment 150, remuneration paid to scientists 50, the total amount of 2 lakh is debited to the P&L.
Allowed, ma'am. Section 35.
Under 35, this will be allowed. This will be allowed under the old as well as the new scheme of taxation. 100% of the expenditure and therefore no further adjustment is required. Fine?
Yes, ma'am. Clear?
Yes.
Okay, any questions, any doubt with respect to this? Okay, let us move to the fourth question then. IIT Limited is engaged in the manufacturing of pipes and tubes. The P&L of the company for the year ended 31st March shows a net profit of 405 lakh. The following information and particulars are furnished. You are required to compute the total income, indicating the reasons for treatment of each item, assuming that the company has not opted for 115 BAA or BAB. A group free air ticket was provided by a supplier for reaching a certain volume of purchase during the financial year 24-25. The same is encashed by the company for 10 lakhs in April 24 and credited to the general reserve account.
Business per 28/4.
Correct. So here you need to make a reference to the 28.4, that the value of the free ticket provided by the supplier is the benefit arising from the business, even though it is, whether or not it is convertible into money. Do you recollect this? So if you remember 28.4 that we have done it, it says any benefit or perquisite arising from the business or profession, whether it is in cash or whether it is in kind. So this is a benefit arising from the exercise of my profession. Right? So in that particular case, this will be considered as the perquisite under 28.4. And plus you will write for the payer, there will be TDS under which section?
194.
94.
10% if it is amount is greater than rupees 20,000.
Right? So this will be chargeable under 28.4. What if the question provided like this? If the question told you that we provided the dealer the invitation to a conference. Listen to this point. The supplier provided to this dealer, to the assessee, the admission to a conference, right, for the purpose of explaining the products of the supplier. The conference ticket was amounting to rupees 10,000 for any outsiders. What will be your answer?
It is not business purposes, ma'am, because the conference is held for explaining the products of the company.
Correct. So you will write like the CBDT circular. The CBDT circular provides that any admission to conference for explaining the product is not in the nature of perquisite. However, if the question says that the dealer was invited to a conference, right, for explaining the product, the dealers were given 2 days stay in the hotel in, let's say, Malaysia. Then
it is a perquisite, ma'am.
correct. Then it is a
After
perquisite.
conference, there is a stay in a hotel.
Correct. Even if the leisure trip is there or not, it is perquisite under 28.4. If any kind of incentives are given to dealer, let's say if the dealer is given 10,000 voucher of Chroma for the purpose of, due to the reason that the dealer achieved a sales target. What is it?
Business purpose.
It's a business purpose. Yeah. So this is what you have to remember during examination. Next is a regular supplier of raw material agreed for settlement of 8 lakh instead of 10 lakh for poor quality of material supplied during the previous year, which was not given effect in the running account of the supplier.
Deemed income, ma'am, 41.
Correct. So again, you will write that there has been the expenditure allowed, there has been a deduction in respect of the expenditure or a trading liability in the last year, and now there is a benefit arising due to the remission or cessation of a trading liability. and therefore this amount waived by the supplier is deemed income under 41(1). The fact that it is not given effect in the account of the supplier is not relevant. Clear? Next, Andhra Bank sanctioned and disbursed a term loan for a sum of rupees 50 lakh. Interest of 8 lakh was in arrears. Bank has converted the arrear interest into a new loan repayable in 10 equal installments. During the year, the company has paid 2 installments and the amount so paid has been reduced from the funded interest in the balance sheet. We just now did it.
43B only to the
Allowed
payment
on payment.
1.6 will be allowed. 8 by
Correct.
10 into 2.
So 43B says any loan that you have paid, interest on loan is allowed on payment basis. Conversion of interest into loan is not considered as actual payment. However, when you actually pay that loan installment, you will be allowed. Now here the assessee has paid the 2 installments. 8 lakh into 2 divided by 10, which comes to how much? 1.6 lakh. This will be allowed as a deduction. Clear? Next is the company has remitted rupees 5 lakh as interest to a company incorporated in US on a loan taken 2 years ago. Tax deducted under 195 from such interest has been deposited by the company on 15th July 2025. Said interest was debited to P&L.
Allowed no changes, ma'am, because before the filing of due date of return, he has paid.
See, here there are 2 things which you should be considering in the exam. Although in your module, what is given is the tax has been deducted on interest payable outside India to a foreign company during the previous year 24-25. And the same has been deposited before the due date of filing return of income under 139(1). Therefore, 40A1 is not attracted and therefore no disallowance will be made. Yes, if the TDS was not deducted until July, then what would have been your answer?
100% disallowance.
100% disallowance. But if, let's say, for example, I am saying that the TDS was not deducted at all, and if the company is remitting the interest with respect to a loan taken for his business outside India, then what would be your answer? The answer would be that TDS is not required to be deducted in that case because the interest expense is for the business outside India. And in that case, the interest does not accrue or arise in India for the non-resident. And therefore, the income is not chargeable to tax itself. You will learn that in international tax class. And therefore, the TDS is not required to be deducted. Clear?
Yes,
So,
ma'am.
for the interest to accrue or arise in India, the interest should be paid in respect of business carried in India. If the business is carried on outside India, if the interest is paid in respect of a business outside India, then it will not be deemed to accrue or arise in India. Clear? Next one is Sandeep, a sales executive stationed at HO at Delhi, was on an official tour in Bangalore from 31st May 24 to 18 June 24 and then 28 September to 15th October for business development. Company paid Sandeep salary in cash from its local office at Bangalore for the month of May, September, amounting to 45 and 47 net of TDS. As Sandeep has no bank account at Bangalore, these were included in the amount of salary debited to P&L. Yes? Yes, Pastor?
Allowed, ma'am.
Allowed? Why?
Rule 6 DD.
Rule 16. Correct. So, Rule 60D says what? That if an employee is temporarily posted for a period more than 15 days. In this case, Sandeep is posted for how many days? He has been posted on 31st May to 18th June, which is more than 15 days. Second time also 20th September to 15th October, which is more than 15 days. So he's covered under Rule 60. And if he does not maintain a bank account in that particular city, which is not his normal place of duty, it is not his normal place of office, and the TDS has been duly deducted under 192. So in that case, no disallowance under 48(3) will be made. Any questions? Fine. Last one is the company has contributed 50,000 by account pay check to an electoral trust and the same stands under the head general expenses. This is very simple.
Disallowed.
Disallowed and allowed under section 80 GG.
DTP.
Yeah. Next question is G Limited, a company in which the public are substantially interested, is engaged in the business of growing and manufacturing tea in India. For the previous year ended 31st March, its composite business profits before allowing deduction is 60 lakh. On 1st September, it deposited a sum of 11 lakh in the tea development account. During the previous year 22-23, G incurred a business loss of 14 which has been carried forward. On 21st January 25, it withdrew 10 lakh from the deposit account which is utilized as under 6 lakh for the purchase of non-dep asset, 3 lakh for the purchase of machinery to be installed in office premises, 1 lakh was spent for the purpose of scheme. On 5th April, you are required to determine the business income and the tax consequences and what will be the consequence if the asset was purchased for 6 lakh and sold for 8 lakh in April 25. So, first of all, what are we referring to here? 33AB, do you remember tea, coffee, rubber development? Yes? This is a
Yes,
composite income, right? So 60 lakh is my composite income. Now, what will be the deduction under 33AB? What is the deduction first of all? Yes, what is the deduction under 33?
lower of amount deposited or
Correct. Lower of the amount deposited or the 40% of the profits. Right? So, what is the amount deposited? 11 lakh. Correct? Of what is the 40% of 60 lakh? 24 lakh. So, what is the lower amount?
11 lakh.
11 lakh. Correct? So, this is how we would be doing 60 lakh minus 11 lakh. 49 lakh is my business income. Out of this, now this is the composite income. Now, this is into the business of growing and manufacturing tea in India. So, how much is the agricultural income? How much is the taxable income?
60 agriculture,
Correct.
40% taxable.
So, 60 is the agricultural income. As per Rule 8, this will be reduced. This will be exempt. Balance will be my business income. Clear? Now, out of this, what will be the impact of this? Now, it has withdrew 10 lakh from the deposit account, which is utilized as under 6 lakh for the purchase of non-depreciable asset as per the scheme specified. So, whether the 6 lakh will be taxable? Not taxable, right? Because this is
Yes.
as per the scheme
As per the
specified.
scheme.
Right? So if you withdraw the amount of 10 lakh, now this has to be utilized in the manner which is prescribed in the scheme. Otherwise, this will be deemed as the business income. Now 6 lakh is as per the scheme, so this will not be taxable. Right? Yes or no? Fine. 3 lakh for the purchase of machinery to be installed in the office premises.
It will be income added in the income because it is not as per the specified.
Correct. So what does 33AB tells you? 33AB says that the condition is that when you withdraw the amount for ineligible purposes. Now, what are the ineligible purposes? One of the ineligible purposes, amount utilized for the purchase of any plant and machinery installed in the office premises or residential accommodation, or any office appliances except
Computers.
computers. Very good. So if you are withdrawing the amount for any plant and machinery installed in office premises or residential accommodation or any office appliances, then it will be deemed as the income in the year of withdrawal. So this 3 lakh is not allowed, right? However, if you have withdrawn and used for 3 lakh, this will be deemed to be the income. 1 lakh was spent for the purpose of scheme on 5th April 2025. Yes. Yes, please.
Income because it has been spent in the next financial year.
Yes.
In the next financial year, will it be allowed as deduction, ma'am?
Yes. In the next financial year, if this is as per the scheme which is there, this will be allowed, right? But in this year, if the amount withdrawn remains unutilized, this will not be allowed as the deduction. Now, when coming to the next financial year, I'll talk about it. For this financial year, this amount is withdrawn, but not utilized. This will be deemed to be the income of the previous year of withdrawal. Clear? So in this year, this will be deemed to be my income. Now, when coming to next year, now this is spent for the purpose of the scheme. Now, when you deposited the amount into the scheme, at that time you already claimed the deduction under 33AB. Now, when you withdraw the amount again and use for any purpose specified in the scheme, use for any revenue expenditure, that will not be allowed as a deduction because you have already claimed the deduction when you deposited the amount. So it would not be allowed as a deduction in the next year. But this year it will be deemed to be the income because you have not utilized in this year itself. Are we understanding this?
Okay, ma'am.
Clear? So this year, this amount is withdrawn and not utilized. So this will be income. Unless it is withdrawn because of any death of the assessee or because of the partition of the HUF or because of liquidation of company. In that case, any amount withdrawn but not utilized is not taxable. Clear? Any
Clear.
questions? Any doubt? Fine. If the amount was withdrawn, let's say for purchase of computers, then it would have been allowed or not?
Allowed.
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 Then in that case, there would not have been any problem. Next is, what will be the consequence if the asset which was purchased for 6 lakh is sold for 8 lakh in April 2025?
Deemed to be income, ma'am.
Income.
It is not utilized for 8 years.
Correct. So, if the asset is purchased out of deposit account, is sold within the period of 8 years, then the cost of the asset which is allowed, right? So this cost of asset shall be deemed to be the PGBP of the year in which the asset is sold. Not the capital gain, but the cost of the asset now will be considered as the PGBP because you had claimed the cost of the asset. When you deposited the amount in the deposit account, that was for the purpose of utilizing towards the cost of the asset. Now the cost of the asset will be deemed to be the income. Are we clear? So what is the cost of my asset?
6 lakhs.
6 lakh. Now, in this case, understand, this 6 lakh will be deemed to be the business income. Now, whether this entire 6 lakh will be taxable?
Yes, ma'am.
No. This 6 lakh is still a composite income. This 6 lakh which is there is part of the 11 lakh which is deposited in the specified account. Right. This 6 lakh was the part of the 11 lakh for which you have claimed the deduction under 33AB. This 6 lakh is still a composite income. So only 40% of the 6 lakh will be taxable. 60% will still be agricultural income. Are you getting this point? So
Yes,
6 lakh, 40% will be chargeable as business income. 60% will be agricultural income. Clear? Clear?
Clear.
Plus, do not forget to consider the short-term capital gain. So not
Yes,
only it will be treated as business income, 2,40,000, but there will also be capital gain which will be to the extent of 2.
2 lakh.
So there will be a deemed income plus there will be a short-term capital gain of 2 lakh. Are we clear?
Yes, ma'am.
Yes, ma'am.
Yes. So here you will have the deemed income plus the capital gain which has been there. So whatever deemed income becomes taxable, even the earlier ones that we have considered here, which is pertaining to the amount not utilized, amount misutilized for purchase of office premises, for the purchase of machinery installed in office premises, all of this income also only 40% will be taxable as business income. Balance 60% will still be chargeable as agricultural income. Clear? Fine.
Yes, ma'am. Yes, ma'am.
Now, what about the business losses? It had incurred a business loss of 14 lakh. What will you do with that? So the question is whether you will first set off the business loss or will you first calculate the deduction under 33AB?
First, calculate the deduction.
Correct. First, we'll calculate the deduction over here. So this is the deduction that we will calculate and then we will set off the business losses if any. Fine. Any questions? Any doubt? Any questions?
Clear, ma'am.
Okay. So here we have tried to cover maximum amount of questions, right? Now, I hope this has given you a lot of practice and understanding for the PGBP, which we were not able to do at that point in time. So I will recommend you solve more and more questions from the past papers, from your RTPs, MTPs, because this is a very, very important area. And next lecture onwards, we will be starting the assessment of various entities class. Right? So next lecture, we will have it on Thursday. From there, we will start with the assessment of various entities class, wherein we will be again getting into the assessment of companies, HUFs, AOPs, BOI, partnership firms. All of that we will be doing it. Fine? So with this, I'll stop here. If you have any questions, we'll be happy to take it up. Otherwise, we'll just stop the session over here.
मैम TDS अभी इंटरेस्ट पे करते हैं ना मैम NRI को, उस पे सेक्शन 195 के नीचे TDS है वो 20% ही है ना मैम?
See, 195 में कोई रेट नहीं दिया हुआ है. 195 which is there, it is without any rate, right? So you will see that in TDS class that 195 में कोई रेट नहीं दिया है. 195 में जो रेट आता है वो रेस्पेक्टिव सेक्शन से आता है, बट इंटरेस्ट के ऊपर इट इज 20% और द रेट अंडर द ट्रीटी.
ओके मैम.
Right? Okay. So
Ma'am,
that's it for today. Yes.
Ma'am, last question in question number 4, second last adjustment is there, no? In that 15 days criteria is there for both the deduction. We have to see the 15 days criteria.
Good question. So yes, you have to see that for each of the payment that has been made, whether the 15 days was there or not. It is not like a combined पूरे साल का 15 days.
Okay,
It has to be a continuous period of more than 15 days.
Yes, 6DD talks about that.
Correct. Any other question?
Thank you so much, ma'am. You have covered the illustrations. It's very nice. We learned many things today.
Yeah. Thank you so much.
Thank you.
And this is how you have to practice, but please do not make the practice on rough papers, calculators. I used to do that mistake, and then when I gave my mock papers, I realized that that is not the way that you should be doing it, because we have a habit ki calculator pe we'll do it on some rough paper, add less. Don't do like that. Do it in a proper way. That way you will be able to present in exams better. Otherwise, most of us make this mistake of doing it in a rough, like a rough practice. Don't do that. Do it all the questions properly. The moment you will start writing these answers, you will be able to produce that in the examination. Fine? Okay, I think we'll stop here for today and we'll see you in the
Thank you,
next
ma'am.
class. Thank you so much.
Thank you, ma'am. Thank you, ma'am.
Thank you.
Thank you.
We can close the session. Yes.